Right, so it's recapping this week's key events that we have seen starting off in the UK. We did see the Bank of England's rate decision where they did keep rates and policy unchanged, but where the surprise came was the move in the vote split, moving back to 6-2 from 5-3, so one less member calling for that hike. And in terms of reaction, we saw a large amount of weakness in the pound across the board, with sterling dollar or cable, as we know, dropping around 100 pips. There's some real weakness being observed, and with that, it was accompanied by some dovish rhetoric, or bearish even as well, from the Bank of England at both the statement and the quarterly inflation report, noting they see slower growth, weak real wages in the UK and a lack of investment. Now this is all being attributed to Brexit by the Bank of England, so despite the fact that we haven't officially divorced as of yet, are still taking place with the negotiations, it's still having its negative effects on economic conditions in the UK. And at the moment, the Bank of England are being forced to sit on their hands just due to many current underlying issues, forcing them not being able to raise rates, because in any normal conditions they would have raised by now in order to try and cool inflation, as they still see it above their targets over the coming years. So just be wary of that. It's likely to cap any GBP strength going forward for the time being, and what will dictate pricing as well is inflation data, so do keep an eye on that. Over in the United States, then, for the dollar, the theme has been greenback weakness this week. In terms of data points, we've seen weak ISM non-manufacturing and weak ISM manufacturing data. Non-farm payrolls is to dictate trading going forward and select a direction in terms of short term, but what will really solidify that will be the US CPI. As we know, that's a real focus at the moment for the Federal Reserve, so that is due out in the coming weeks, so do keep that in your calendars, because that will solidify any direction the dollar chooses to go in or continue to move in, so just be wary of that. In terms of dollar specific crosses, or pairs rather, starting off with dollar yen, has recently broken 110 to the downside, looks exposed to breaking 109 and sitting around the 108 area before we see a rebound for there. And also euro dollar still making great way at the moment, looking to push through 120, and some are even calling 120, 150. So just to be aware of that, it's still looking very strong there. Now, while on the subject of euro, we did see an ECB bulletin that did note they still see slow rising consumer prices and slow wages for the bloc in the Eurozone, despite strengthening in the economic picture. So with that could raise some doubts for markets that are pricing in for the ECB to announce tapering in September. That could raise some doubts, because that seems to be generally expected and what's priced into the markets for the euro at the moment. But nevertheless, euro shrugged that off, ignored those comments, and still remaining firm. But it's something to be very wary of, guys. We've seen Draghi in the past letting down the market, so just be very cautious with your trading on that front. Looking over in Australia then, the RBA at their rate decision, they did keep rates and policy unchanged as expected, but they did talk down the Australian dollar, or attempt to. They did note that the strength in the Aussie dollar could weigh on growth for the country. So that did see a sell-off in Aussie dollar. We did drop just shy of 100 pips on the back of that. It does look to want to continue to pull back at the moment, looking to test maybe around the 0.7800 area before we see a bounce back again for it to continue its move higher. So that's it from me. Thank you very much for tuning in. Have a great weekend. Thank you.